Hello, I'm Ricardo Rangel Jr. with Lepicrega Realtors in Iowa City. I've been a realtor for 10 years, and today we have Zach.
My name is Zach Howard. I am with Treadstone Mortgage out of Elk River, Minnesota. We're a local lender, but we are licensed in several states, including Iowa, which is why Ricardo and I have connected. We were friends probably, 7 or 8 years ago back in well, for me, it was my college days. I don't think Ricardo was in college at the time, but yeah, that's just a little bit about me. We try to help as many people as we possibly can, whether it's using down payment assistance programs or just educating people on the housing industry, which is what we're trying to do now.
Tell me, Zach, how did you choose to affiliate yourself with the company you're with now?
It was kind of a long process. Really decided I wanted to jump into the industry about 8 months ago. Started doing research. How do I become a loan officer? What are the steps I need to take to get there? So ultimately went through all the legal stuff, passing tests, exams, things like that, got licensed, and I decided to sign up for some additional coaching on my own. I thought it would be a good opportunity to potentially help secure a job. Well, in doing so, I was connected with a guy by the name of Dustin Owen, who runs the Loan Officer podcast. So if you guys haven't heard, check him out. But yeah, he actually gave me a list of 3 people in my market, which I'm up in the Twin Cities. And he said, look, I can't help you, but these are the 3 people you want to work for. If you end up working for any of them, you're in good hands. So that's kind of what I did. I got an opportunity with the Molly Nadu team, and here we are today.
You didn't come from the real estate or mortgage worlds. Can you tell me what's a thing or two that you learned that were like you had no idea? Things that were like, oh wow, more people need to know this about how the industry works.
Never coming from the industry, I've never even purchased my own home before. So my mindset has just completely shifted since I joined the industry. The number one thing in this industry is relationship building. So, I mean, a lot of people know that, a lot of people don't, but the ultimate goal is to help people, right? We want to help people purchase homes. Now, before I got into this position, I wanted to own a home, but I wasn't necessarily in a rush to do so. But with that mindset shift, now I understand that owning a home is investing in yourself and your future. Home ownership is a direct route to generating wealth for yourself and your family. So that's probably just the biggest shift. I wanted to get into some sort of real estate investing. That's kind of like what started this whole path. And just you can start with your own primary residence. Like that's the most important thing. So
Tell me a little bit about the process. I like what you guys, when we had our call last week, you mentioned how you treat your clients. So for the real estate professionals who are watching who've never worked with you, what can they expect when they do business with you, when their clients do business with you?
definitely. So as I said, I'm a little bit green to the industry, but my boss, Miss Molly Nadu, 24-year veteran. So she's got our processes figured out pretty well. So what you can expect if somebody comes to us, a lead is what we would call it, but we're not transactional, but internally we would call it a lead. Within 2 hours, we're going to be reaching out to that person via phone call. If we can't get a hold of them via phone call, we'll be shooting over our apply online link. From there, if they end up submitting their application, I'll review it, which we actually have a team. I guess that's important to say. So we have 2 of us on the front end. We're called pre-approval specialists. So that's who would be reaching out, taking loan application, starting to structure the file. We are licensed as well. Obviously, you need to be licensed in order to do some of these things. So yeah, we would be reaching out to you. We'll get your application. We'll give you a call. We'll review it with you. We'll figure out your goals. What are you trying to accomplish? How much money can you bring to the transaction? Oh, are you a veteran? We'll just kind of start exploring like the basics of who you are and what you're looking for so we can better help serve you throughout the process. Now, once we get that application and we review it with you, we get you scheduled with Molly. Hopefully, we'll also send out a link to our secure portal called Blend. That's how you're going to upload all of your documentation. So you people in Iowa, you have an option if you decide to work with us. But once we have that documentation, we hope to get you pre-approved as quickly as we can. Now, we do we like to really dig deep. So we're not just a lender that's just like, oh, you're pre-qualified. Yeah, I think you'll be good. We really dive deep into your documents. If you get a pre-approval letter from us, it has value. So that means, what does that mean exactly? Like if you go shopping with Ricardo, you know that you can make an offer and that your financing is secure. So yeah, once we get the app, you get scheduled with Molly. If we have all of your docs right then and there, great. You could be pre-approved literally within a day. We can move fast if you need us to. Now, once you get pre-approved and you're out shopping and you end up getting a purchase agreement, great. That'll come into us. And from there, you're kind of in our processors world. So you'd be working with either Caitlin or Michelle, as well as Molly. Once you're in that stage of the transaction, you'll be getting Tuesday updates from our team every single week. So Molly's going to be calling listing agent, buyer's agent, just giving updates. This is where we're at in the transaction. Now, our processors will also be calling the client, giving them an update. A lot of times a transaction might be going smoothly on the back end, but when you hear no news, people tend to get worried and assume something's wrong. So that's kind of like the front end of the process. I'm still getting familiar with like the whole back end side of things, but that's really what you can expect.
What's your normal time to close from accepted offer to when you're able to have what we call financing commitment and then close?
Right. So I would say 3 weeks is probably right around there. I mean, each transaction is different. If you needed to close in 2 weeks, we could probably get it done. It would be a little tough. That'd be an outlier, but I would say 3 weeks typically.
That's pretty fast, honestly. Most lenders down here want 45 days.
Yeah. We can definitely move quick if we need to. Like I said, certain transactions are a little bit more in depth. That obviously wouldn't be the case. But if it was cut and dry, you work with us, you're getting us your documents, you're picking up the phone when we have questions for you. We're always picking up the phone when you have questions for us. I mean, if we get everything we need, we can move quickly. And important to know, Molly does work on the weekend. So, I mean, I know Ricardo and I talked. He doesn't do a whole lot of business on the weekends, but a lot of people do, just based on schedule. People are out working. It's really a good opportunity to, make deals. So she is available. And yeah, if you need pre-approved on a specific property, you send us the numbers, we'll get them to you on the weekend.
To clarify, I do work weekends. It's just that my buyers are typically pre-approved by Friday at 5 p.m. if we can make that happen.
Gotcha. My apologies on that misunderstanding.
Can you talk about how other states are different when it comes to their title guarantees, mortgage insurance versus Iowa?
Yeah, so this was interesting because I did not know this until I spoke with Ricardo, but Iowa is actually the only state in the country that has something called Iowa Title Guarantee. So there's a history that goes back, but essentially, and correct me if I'm wrong, but Iowa, there's always a lawyer involved that's going to, I don't know if it's called a title commitment or the exact terminology, but almost all the titles in Iowa are clean because of this process. So in states like Minnesota, you would go out and you would get private title insurance, right? So there's a lender's policy, which is required. Owner's policy is optional, but always recommended. And that insurance is basically just to protect against like clean title. So there aren't any liens that could challenge, the mortgage first position. Now in Iowa, and this is the cool part about it, you're almost guaranteed to have a clean title. I think you are guaranteed, but if you decide you do want to pay for the title insurance, or it might be called something different, but it's a flat fee of $175. So those costs are, I think typically up here we see about $1,000 between optional owner's policy and lender's policy. And from the research that I did, a lender's policy is required. So to sell loans on the secondary market, so we would be required to get the lender's policy. But if that policy is obtained, like the buyer's policy is automatic. So $175 flat rate, and you have clean title. It's it's a pretty incredible program, and I'm surprised that other states don't do it.
We are also, I believe, one of 2 states that use abstracts, like physical abstracts, which is
Right.
a physical copy of the history of the property all the way to the day that Iowa became its own state.
Yeah,
And
that's incredible.
and it is nice because owners save on those policies, and the peace of mind of having clear title is great. And some glossary terms for people: when we say clean title, we mean you know you are the owner of the property. No one's going to come in and say, oh, hey, I have a claim of ownership to this property because it was inherited from my relative 10, 20, 30, 50 years ago. When Zach talks about a clear mortgage first position, the liens are what guarantees the lien holder, typically the mortgage holder, to get paid should the property transfer ownership. And most mortgages are first position. There are things called mechanics liens. Say you get a new roof put on your house and you don't pay them, the contractor can put a mechanics lien on your property. So if you ever sell that property, they are entitled to get paid what they are owed. But the mortgage would be the first position, so the mortgage has to get paid first. In the event that that sale is a short sale or just the property value is not there to cover everything, it goes first position and then everything else.
That's exactly right. But yeah, and going back to the abstract, I mean, how cool is that to have like a physical like book of the history of your home? And I've met with a couple of title companies up here to give me the like introductory, like this is what we do, this is how it works. Abstracts up here aren't really a thing anymore. I believe they do a process or use something called Torrens. Not super familiar on what that is, but it's basically the alternative to an abstract. So yeah, it's not a thing. So if you live in Iowa, like you should feel confident, more confident than in any other state, that you have a clean title or that you own the property, So really cool. And like I said, I had no idea until you mentioned that to me, and I did some research on it. So
You mentioned you do VA loans. Do you do all types of loans?
yeah, so I not all types of loans. I don't think there's a lender out there who does all types, but we're very well versed in the standard types of loans, so conventional financing, FHA, USDA, VA. We also do quite a bit of Minnesota housing down payment assistance. You have to be, like a registered lender in order to do that. As far as Iowa programs go, I don't believe we have access to that, but as I grow in my career, that's something I personally want to look into because my roots are in Iowa, my circle of influence. So yeah, we also do have some other programs, something called a bridge loan.
I want to explain to the viewers how a
Yeah,
bridge loan works or how it might be useful.
right. Yeah. So essentially, if you're looking to purchase a new home and you also need to sell your home, but you don't want to have to deal with like the panic of like, same day close, get in, get out, like the timing of everything, you can secure a bridge loan where you use the equity in your current home to essentially fund your next home purchase. So there are timing elements around it, and there are some specific, program guidelines, etc. But we do that. We are starting to do more and more rehab loans. So that's another really cool thing. FHA 203K standard and limited, as well as I believe it's Fannie Mae home style renovation. But these programs essentially allow you to finance in repairs. So, a lot of times people talk location, 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 right? That's the most important thing. Well, if you have the perfect location with like newly remodeled homes, the competition is immense. But if you find a home that is in that perfect location, they need some work, less people are interested in that because they don't want to go the extra mile, to put in the work. But with these types of loans, you can finance in the rehab right into the loan, and really you're getting what you want.
Question about bridge loans. Obviously, you need to qualify for them, but what are the parameters? Because I've had clients who wish they could get a bridge loan, but they can't. How does that work in terms of interest, debt to income, and
it's a minimum loan amount of $40,000. The max loan term of 90 days between closing and bridge loan and selling the current home. So you have 90 days. There are no payments due within 90 days, but must be paid off in full at the end of the term. This is actually interesting. I had an agent who was looking at using a bridge loan personally. He asked me, can a bridge loan be used to roll into FHA financing? It cannot. It can only be used for a conventional financing. So that's important to know. You also need to have a minimum of 25% equity in the current home. So also important. And it says it can often be done without an appraisal if home is currently listed on the MLS. So doesn't exactly answer your questions as far as debt to income ratio and specific stuff, but just a few important things.
It's helpful. That's why I ask.
I did want to talk a little bit about kind of just affordability in general. I know we had mentioned that. So I'm going to throw out just a few interesting things. We're really trying to educate and empower our clients on the cost of waiting. So everybody knows that affordability, it's an issue right now. I mean, I think the statistic that I found was since 2019, the cost of goods and services has inflated by 20%. So inflation is real. It is impacting everyday Americans. It's impacting everybody, to be honest with you. But it's important to know that even though it is super expensive right now because of where interest rates are, it's also perspective, right? So you have to look at the whole picture. In the 1980s, interest rates sat between 10 and 18% national averages. Now, during that decade, home prices appreciated every single year. So that's my next point, right? You can wait, but home prices almost always keep going up. So the statistic on that one is 73 out of 80 years between 1942 and 2022, home prices appreciated 90% of the time. There were only like 5, 6, 7, whatever the number is, 5 to 7 years where home prices decreased. Most of those were after the housing crisis of 08, which we're in a different world now. Regulations came through. A lot of the predatory lending tactics were wiped out. Not that there are still some lenders who don't want the best for their clients, but a lot of what was happening then, it can't even happen now. Like, you can't just get as many loans as you want. Like, yep, I'll write a loan for you, I'll write a loan for you. There are parameters. And not only that, like, it's important as a lender to explain to your clients, like, look, even though I can approve you at your maximum threshold, you shouldn't. Like, we don't want you to do that. And here's why. When we pull your credit report, we only see what's on that as far as your debts and your expenses go. I don't know what your spending habits are. I don't know how much, I just don't know what you spend. So if you're approved at a maximum amount, you're probably going to be house poor, and nobody wants that. Like, that's not good for anybody. So even though you can get approved at your max amount, we typically don't recommend it. We'll do it if that's what you're asking us for. Ultimately, it's your decision, but we just want to make sure you're aware. Now, a little personal story on just cost of waiting. So you're missing out on building equity, right? You're paying rent. So you're just giving money away to somebody, which I've been there. I'm still there. Yeah. And so here's a story with a client that I have. She's currently pre-approved, accepted purchase agreement. Like, things are looking up for her. But she came to us probably a month or two ago, and she was looking to get pre-approved. She had been pre-approved back in 2020 for like $275,000. Well, at the time, she ultimately decided, look, it's not right for me. I'm going to wait. I'm going to focus on my finances a little more, pay off some debt, try again later. Well, she got promoted at work. And I mean, it wasn't a super significant raise, but enough to make a difference. She paid down debt. Her debt to income ratio was in a much better place. We were only able to pre-approve her at $225,000. So do you know what that does to a person when they're like, I put in all this work to try to get this home? Like, you're always one step behind the appreciation. Like, if you get a cost of living wage increase of like 1 or 2% per year, homes can appreciate 3, 4, 5% year over year, and you're just never catching up. So, and the reason why did her purchasing power go down so much? Interest rates doubled. They literally just doubled. And as we all know, rates are cyclical. You can always refinance down the road. But yeah, it's just important to know, like, the best time to buy was yesterday. The next best time is today. That's a super common, one-liner in the industry, but it's true. If it makes sense for you, it's always better to get in now.
I agree. There are reasons to wait, but if you are ready and pre-approved and you want to move, why wait? Like, I don't get it. And some people do get discouraged, especially in the starter price ranges, because I don't know about your market, but down here it's very competitive, especially this time of year. There's hardly any inventory in the starter home market. So, when weeks go by, nothing's coming on, you've made a couple offers that you keep getting outbid on, yeah, you can get discouraged, but I don't think that's a reason to wait if you're able to move forward. So on those lines, how long is a pre-approval good for?
Yeah, so a pre-approval is good for as long as your credit report, which is 120 days. So after 120 days, we're going to have to repull credit, updated documentation, which that's another thing. Getting a home is work, right? Obtaining a mortgage is work. We're going to be reaching out to you throughout the process, like, hey, we need updated documents. We need this, we need that. So it is work, which, it's not for the lazy. Like, you have to put in the work, but it is so worth it once you get to the end. Yeah. 120 days, short answer.
It's not a one-click shopping, right?
Right. And that's the thing. Some of these online lenders, super transactional, hide costs up front, like initial disclosures, things like that. We always try to be extremely transparent with our customers, our clients. We want them to know, like, hey, these are these fees. This is what they are. We're going to walk you through them. Another important thing to know is even like brokerage fee, right, for the real estate agent. We include that in our itemized fee worksheet just so that the client doesn't have to cut a separate check after the transaction. So we try to overestimate up front so there aren't any like surprises at the end, like, oh, surprise, here you go. Another thing, and this wasn't even another personal story, this wasn't even an online lender, but my little sister was purchasing a new property for her cheerleading gym that she owns in Ottumwa. If anybody is from Ottumwa, she was pre-approved with the lender. It was a small bank. Don't know the exact bank. Pre-approved. Thought all was well. Everything they had been telling her was good. She got them everything that they requested from her. A week before the close date, she gets an email. Not even a phone call, an email. I'm sorry, we can't do your loan. And that was basically it. Eventually she reached out to them, got a hold of them, but an email to tell somebody like, hey, all of this work that you put in, sorry, you're screwed. So that's not how we do business. Another important thing, if you come to us and you have poor credit, we don't just say, see you later, come back in a year or two when you figured it out. We're going to provide you with the guidance and a plan to help you get to where you need, right? And just our follow-up, like every single day of the week, we call people and we have different theme days each day. So our follow-up is great. We don't leave you hanging. You might even get annoyed of us after a while, but if you tell me, I'll calm it down a little. But yeah, we really work with people to try to get them to where they are or to where they want to be.
Man, there are so many horror stories out there, but then the loan got done, right? Because another bank.
Yeah, another to end that story, another bank came in, saved the day. Thank you to them. Again, not sure which one it was, but yeah, she is in the building and everything's good. But yeah, I mean it's a lot of money, right? And just to be handled in that manner, like, surprise, it fell through. Like, it's just terrible. People don't have the spine or just the sincerity to be honest and transparent. And that's really what you need to do in this industry. Like, this is the largest purchase of most people's lives.
You said something just now about when you were talking about fees. You mentioned a brokerage fee. Is that for the loan or is that like real estate brokerage fees?
That's a real estate brokerage fee. I'm assuming your brokerage probably has one, or
we do. It's typically on the seller side of the transaction, but nowadays there's conversation about that some of that potentially moving to the buyer side of the transaction. That's why
Right.
that's interesting to hear, because right now the
NAR lawsuit.
yeah, and everyone's freaking out about what's going to happen should a buyer be required to pay their broker's fee. So when you said that, I was like, oh, is that something you guys are already doing, or is that new in response? Because we're thinking maybe some lenders will allow buyers to finance their brokerage fee, or at least allow for those types of concessions. We don't know, because obviously they can't in some scenarios, like VA buyers can't do that. Some FHA
Right.
buyers can't do that. But we're thinking they're going to change those laws to allow that.
I don't know if that's specific to Minnesota, but as far as the NAR lawsuit goes, yeah, I mean, I know I talked to an agent up here where their brokerage has already been doing that, like buyer's agreement up front, um, all of these things. But yeah, I don't know exactly what we're gonna see come July. I mean, I follow a prominent real estate agent out of Chicago who just put out a video recently where he was talking about this being a really good thing for agents. He used a statistic, and I'm assuming this is from his own numbers, but he said maybe 1 out of 6 clients will ultimately close the deal, right? So you guys are putting in all that work up front, and half the time, or more than half the time, there's nothing to come from it. Like, you're going to do it, it's your job, you want to help people, but a lot of times you don't get all the way through the close. So his whole thought is, if that agreement is made up front, the people who come in and are willing to like sign an agreement, they're going to be more serious. And so, yeah, just more efficiency for the agent, more conversions.
Maybe I need to watch that, because 1 out of 6,
Send it to you.
that's not a lot. Or does he mean 1 out of 6 will sign his exclusive agreement, or like 1 out of 6 people he meets with will close a deal? Because that's
I think he's one of the largest agents in Chicago. So maybe he just has so much volume, but because of that, even 1 out of 6, he's converting a high number.
yeah.
But I'm not 100% sure. Before I joined the industry, I didn't even understand how agents were, paid. I didn't understand how commissions worked. And, learning about it now, and it's like, oh, by the way, everything's changing. It should be interesting. But ultimately, do you think it's for the best? Like, what are your thoughts on it?
The actual changes don't affect how we charge what we charge, right? They just
Right.
affect more paperwork and potentially making the buyers pay. Um, I don't think it's for the best, but that doesn't mean that it's not good, if you know what I mean.
Right.
Um, it's a response to a mess up, and I mean it's disruptive, and it's cumbersome, and it's just something to work out, because we've never done this before. So it's kind of like, oh hey, you go figure this out. So it's annoying in that way, is that we have to do work to figure out how we're going to handle it. Do I think it's good for consumers? Not necessarily. Like, the thing wasn't broke, so why fix it? But it
Right.
is what it is, right? I think there are two sides of it. There's what the sellers are thinking and what the buyers are thinking, and they're
Yeah.
hearing different things. The sellers are hearing, oh, the prices are going to come down, or like the commission you pay is going to come down, and it's okay. One, how is it good for you as a seller if prices come down, right? You don't want that. You want your price to keep
I
going
don't
up.
think it's going to, but
Well, I don't think so either. But
yeah.
then there's also the other side, where you're hearing, oh, you don't have to pay your agent so much anymore. That's like a news story. That's nowhere in the settlement. That's just
Right.
speculation from news sources saying that, oh,
Yeah.
because of this, it equals this. There's no research proving that,
Right.
but
All of
the
the media that comes out that is not industry specific is a little misleading. They don't quite understand it. They really think it's going to benefit the buyer. I don't think that's the case. Ultimately, like, people need agents, right? Agents provide so much value. As an agent, if you know how to sell yourself and the value proposition that you have, I don't think you're going to have any issue. Um, but yeah, how is your brokerage kind of coaching you guys as far as what to expect with this coming up?
we're kind of waiting for it to hit. I mean, we have a draft of the new form we'll be required to use. We've been reviewing it. We're proceeding and using it, because we're going to be required to. And we already had an exclusive buyer agreement that we had used since I joined this company. So
Right.
It's just the explaining of it, and it's a longer form. And as far as taking listings, we're answering questions, we're clarifying our value, and we're saying, hey, this is what you can expect when you do what we have to offer here with these terms. If you want to deviate from that, we can't guarantee you the results because it's going to be different. Most of our sales are co-op sales, which means that another agent or even another broker brings the buyer. So when you disrupt that balance, who knows what's going to happen? Because we agents look out for our buyers, but at the same time, if all of a sudden I know that I'm not going to get paid to represent you, then what's my incentive?
I mean, you're putting in a lot of work. You guys definitely deserve to be compensated. You bring a lot of value. There will be people that think they don't need an agent, but we'll see how well those transactions go for them. So
Those people exist now, and there's nothing stopping anyone from representing
right.
themselves. But why don't most people? It's because it's a little more complicated, and most normal people don't have the business acumen to do it, or the time, or
Yeah.
just the willingness to do it. Why don't we cook at home every single day? Why do we go out to eat? Convenience.
Right. The easy analogy is a lawyer, right? Like, are you going to go represent yourself in court? Probably not, because you don't want to end up in jail, right? Well,
But
this is the largest transaction of your life, more than likely. So why would you not trust an expert in the field to guide you and help you along the way? A lot of people believe in that. They want that expert advice. There are a few that probably think they can do it on their own. Maybe they can, but I mean, I can tell you this much. I've been in the industry, 4 months now. I hardly know anything, yet I know 99% more than everybody else who's not in the industry. So you need an agent. You should use an agent. Ricardo's your guy. Definitely.
people underestimate the complexities of the business, and it's not rocket science, but it does help to have knowledge and expertise, and you benefit from that when you hire an agent to work with you, work for you, represent you. We're not
100%.
lawyers, but we are real estate agents.
Right.
And putting yourself in the public shoes, you're a buyer or a seller. Most houses are sold by regular people. We're not corporations. We don't have a vacant house that we can just hold. I want to know that the person buying my house is going to close, and I know that when they're represented by an agent who is
And
professional.
knows what they're doing. Yeah.
Yeah,
100%.
exactly. Because then I might be buying another house, and that purchase hinges on this sale. So why would I risk my sale not going through working with an agent or with a buyer who has no representation? That could jeopardize my next move, and that could cost me thousands of dollars, or it could literally make me homeless.
Yeah.
So that's
Yep.
one scenario. And likewise, when you're a buyer, you're buying a house from a seller directly, no agent representative. There are risks there. There are things you may not know, and this can all be neighborhood specific, right? Like you may not know what the true value is. There will be an appraisal done. You may not be aware of like changes to the neighborhood that are coming. You may not be aware that this house had a terrible mold problem 3 or 4 years ago because you don't have access to the database. So many things could go wrong. But I mean, to kind of circle back to, will this change be good or bad? I don't know. Remains to be seen. I personally don't think it's going to be a huge overnight change in Iowa. I think it could change some things. It's going to open up the door to new business models, potentially more corporate owners. But again, that was the thing that Zillow had tried to do, home holding and selling before. There are companies and brokerages that already do that. So we'll just see if that expands that.
Yeah. There is gosh, I can't remember which brokerage it is, but the guy was actually on a Housing Wire podcast, and he's from Iowa. And basically his business model was already set up for this new environment. He's been doing it for a few years. I think it's like a flat rate. They negotiate. I don't know exactly how it works. It's been probably a month or two since I listened to the podcast, but you could probably find it if you looked it up. I can't remember, but he is from Iowa.
Well, again, there's nothing saying what a broker can charge. Like I could go and charge 50% commission if I really wanted to. Will anyone take me up on that? Of course not. The only thing is you can't do in Iowa. It's illegal to do what's called a net listing, And that means I come in, explaining for those who don't know, say I come to you, the seller, and say, hey, I'm going to sell your house for $150,000. You're going to walk away with $150,000. Are you cool with that, seller? Great. But then I sell it for $200,000. Anything over that 150 is my take-home pay. That's called a net listing. Those are illegal in Iowa.
It's called a what listing?
A net listing.
Oh, net.
Where you promise the seller an amount for the sale, but then you purposely sell it for more, and then you keep that difference.
Gotcha.
You can't do that. And it's kind of like wholesaling. You know, when you go to the seller and say, hey, I'll buy your house for $150, you write up this long purchase agreement, and then you shop the house around. So then you have this house under contract to your name for $150, and then you find a buyer who will buy it for $200. You keep the net. Then you just assign that purchase agreement, and you keep the difference. To me, that's a net listing. It's wholesaling. Somehow that's not illegal.
I've heard of wholesaling.
Documentation. However, a change that's coming to Iowa, I don't know if it already took effect, but now you can't do wholesaling anymore unless you have proper disclosures to the seller that that's what you're doing and that's how it works. And there needs to be a real estate professional involved in that sale.
Gotcha.
So wholesaling is kind of going away down here, at least the way it's encouraged online.
I did just quickly pop it into Google. I think net listings are not legal in Minnesota as well. So
most states don't allow them, especially with realtors. But again, wholesaling, there's typically not an agent who's doing that. It's just an investor who's out there doing their own thing.
That seems sketchy.
Yeah, exactly. And that's where I'm concerned for the industry. How will these changes really impact consumers, right? For the worst. I don't know. I think it's going to open the door to people being taken advantage of, or for more corporations making more money. People forget that realtors are independent contractors. We're small business owners. We're local. We work and we live and we work in the communities that we service. So the idea that, you know, most home sales are going to be done by the conglomerate with like headquarters in one city, I don't know. It doesn't sit right with me.
It's true. I mean, if ultimately the buyer has to pay this commission, and it's already like the affordability issue is already as bad as it is not going to help home buyers. Hopefully that's not what happens. I mean, I think Fannie and Freddie already came out and said they're going to allow concessions for the commissions. So that's good, at least. Like, they're not going to include that for concessions. But yeah, I mean, if it falls to the buyer, it's not going to help them. Like, people can't afford homes as is. So
the buyers need to ask for a concession from the seller anyway. Then what's the point of you discounting the commission when you have to credit it back anyway? And that's where I think it's not going to be a terrible change, because most sellers are going to understand the balance of the transaction. Some might be stubborn, but they'll get the results that they get. They'll get the type of buyers that they get. It will limit their pool of buyers. And, you know, it's, again, if it ain't broke, don't fix it. It's not broke. So I think
you're
not being forced to fix it. It's just another form helping the buyers understand that they might need to pay, but they cannot sign that.
Washington State actually did this already back in January. I think they, like, at a state level, kind of initiated the same policy that this NAR lawsuit did. So I think Washington is already doing it. That's at least what I heard. So there is, I guess, why does that matter? Someone's already doing it, so we can look towards them to see how they're doing it. So that's just additional research if you want. But either way, it's 2 months until July when everything happens. So I don't know. I don't think a whole lot will change. Like you said, it might be more tedious, more paperwork, disclosures to sign. But...
Thank you. To wrap it up, do you have like 2 minutes to wrap it up?
Yeah.
How do people get in touch with you if they need your help?
If you just Google us, we are Treadstone Mortgage in Elk River, Minnesota, the Molly Nadu team. If you want to give our office a call, the number is 612-567-1471. My personal info, if you want to give me a call, my cell is 641-799-6938. Love to help anybody out. You can also find me on LinkedIn, Facebook, or Instagram at Zach Howard Mortgage.
Zach, thank you for your time and your expertise.
Thanks for having me.
Thank you for watching. This is Realtor Ricardo Rangel Jr. with Lepicrager in Iowa City, licensed in Iowa. Thank you, and see you at the next one.